I don't know if you have been paying attention. WePay is one of the best weekly paying ETFs. I know a lot of people shy away from investing in these ETFs whenever they come out at $50, but as I've always say, $50 or $20 can be the main reason why you should or you should not invest in any particular ETF. The main thing you have to follow is its underlying investments and also the price movement. For example, WePay came out at $50, so you might say it's a higher price, but since then, it has gained about $4. But on top of that, it has paid a lot of distributions. I'm going to show you how much it has paid. And if you add those distributions it has paid to the price of today, how much that is going to be. And also, finally, I'm going to give you guidance of how you can invest only $10,000 and how that money will make you a millionaire. But the calculation I'm going to show you is just going to be a projection, is not a guarantee that you're going to make that money. But what we know is the price return that this ETF has gained so far. So first thing you can look here, price range, 52-week range, or since it came out, is between $50.27 to $56.50. So it was even higher than the price it is today. Today's volume is a little bit higher, over 800,000. That's impressive. But if we look at average volume is closer to 400,000. So this means if you buy this ETF, you won't have any trouble selling or buying because it's very liquid, as you can see here. Today, Round Hill has announced distributions for WePay. X date is October 14th, which is tomorrow, and pay date will be October 15th. That's on Wednesday. And this is how much they're going to pay, about 86 cents per share. Remember, 86 cents per share per $50 stock. That's over 80% yield. Very good. Stick around. I'm going to show you a magic compounding effect of that 86 cents per share per week within just 10 years. But first, I want to show a little overview of this ETF for people who are new to this ETF. Round Hill Weekly Pay Universe ETF seeks to track the performance of the selective Round Hill Weekly Pay Universe Index. WePay is designed to invest in eligible universe of single stock weekly pay ETF. There are three main reasons why you should invest in this ETF. According to Round Hill Investment, these are the main three reasons they listed here. The first reason is that this ETF pays weekly distribution. WePay pays distributions every week, offering a recurring income stream for shareholders. The second reason is diversification. WePay offers diversified exposure to the entire suites of Round Hill Weekly Pay ETFs. I'm going to show you those ETFs. I think there are 15 of them, plus bond portfolio. And the third main reason you should invest in this ETF is seamless. WePay is rebalanced monthly to equal weight, ensuring consistent exposure to all single stock weekly pay ETFs in a single ticker. So instead of you buying different ETFs and rebalance yourself, they are going to do that for you. The only thing you have to do is to buy this one ETF and all will be done for you. Very impressive. And they're going to do that with very little fees. I'm going to show you how much you're paying in fees for this ETF. Fund details, ticker symbol is WePay. It trade on SIBO. This is a stock exchange in Chicago. Gross expense ratio is 1.28. So you're paying 1.28 and everything will be done for you. But right now, WePay management fees waived to zero until at least September 30th, 2026. So you have full 1 year. So the way it works is that they are not going to charge a fee on this ETF, but they are going to charge a fee on the underlying ETFs. There are 15 of them. So you're going to be paying indirectly, but directly you are not paying anything. That's what this means. Asset under management as of now is 232 million. Launched, this ETF came out to the market on September 4th, 2025. Can you do option on this? Yes. So if you want to do option on this ETF, you can do options, call or put options. So you can have exposure to this ETF. And on top of that, you can write options if you are willing to do that. Share outstanding as of now is 4,400,000 and management style is passive. This is not actively managed, it's passively managed. As you know, it does have index that it replicates. And of course, the main exposure or the underlying exposure are those 15 stocks. And here are all the ETFs. They have Robinhood, Nvidia, Berkshire Hathaway, Apple, Microsoft, Netflix, Tesla, Amazon, Avgo, Palantir, Google, Meta, and the last but not the least holding they have is First American Government Obligations Fund. And percentage of this is very negligible. It's only 0.12%. So it's pretty much nothing. The main underlyings are these 15 stocks or ETFs or fund. So the biggest one here is Roundhill AMD at 9.59%. Robinhood is at 7%, Nvidia is at 6%. So all in all, they are going to be pretty much equal balanced, but sometimes one does perform really well. For example, AMD recently has been performing really well. So you can see here it has outperformed all the other ETFs. You can buy yourself these single stock individual ETFs and rebalance for yourself, which is going to be a lot of work. So the easiest way is to buy just one ETF and call it a day. Distribution history, since it came out, the first time they paid was September 24, 25. They paid about 51 cents. Second time they paid 88 cents. That was October 1st. October 8th, they pay 73 cents. And the next distributions they're going to pay on Wednesday will be 86 cents. And that's October 15th. The following distribution will be on September 22, September 29, November 5th, November 13. So in order for you not to miss any of these updates, make sure you subscribe to this channel and hit that belly button. So whenever there's any new changes or updates, I'm going to let you know. And again, if you like this type of content, please smash the like button and don't forget to share with someone you think this video might help. So now let's go to our final chapter, and our final chapter will be on this spreadsheet where I'm going to show you income guidance, how much you need to invest to generate a certain amount of income monthly. Or if you're an investor who want to invest your money today and you want to let your money grow to $1 million portfolio, I'm going to show you how much you need to invest to turn your portfolio into $1 million portfolio. But everything I'm going to show you here, guys, is just a guidance and is just a projection based on these numbers we have. I get all these numbers from Roundhill Investments, which is registered and regulated by the SEC. This is a US regulatory body that regulates all investments products in the United States. The first thing I'm going to show you here is WPAY average distribution since it came out. It did pay, as I've shown you, 51 cents, 88 cents, 73 cents, 86 cents. So average, it will be 82 cents. All in all, together, they have paid $2.47. So if you add that $2.47 to the price of today, which is 54.10, that's a 56.57. Remember, when this ETF came out, it was around $50. That it's a return of 13.14% since it came out. Very impressive. Remember, it hasn't been that long since it came out. Now, if we come down here, we can see the price of today, 54.10, average distribution 82. That's annual yield of 78.82%. And if we go with the last distribution they are paying, which is 86 cents, that's a current yield of 82.66. Very impressive. Whether you're receiving the average yield or you're receiving current yield, they are both very attractive and you're going to make a lot of money with either yield. Now down here is income projection for 2025. If you invested $10,000 in WPAY, you're going to get 185 shares, and that will give you annual income of $7,882. Weekly, you're only going to get 152. So there's not much you can do with this for most people. But if you want to get a little bit substantial amount of money, you put, let's say, for example, 100,000. That will give you 1,516, and that's 78,810. This is significant for a lot of people. Remember, if you're getting $78,000, man, you can retire with this amount of money, even after paying all your taxes. But of course, it depends on what account you're investing and at what price you buy this ETF. This is a projection if you buy with the price of today. And let's say, for example, if you put $200,000, you will get 3,697 shares, and that's 3,031 per week, or 157,634 per year. That's a lot of money for pretty much 99% of people. And you can retire anywhere you want with this amount of money. But we can continue to $500,000. That will give you about $7,579 per week. So if you have this type of money, this is how much you can generate. But again, this is just a projection if they will keep paying the same type of distributions. If they lower distributions, of course, your income will significantly decline. And of course, if they increase their distribution, which is unlikely, then of course, your income will also increase. Now, let me show you the most magical thing here. The most magical thing here is for people who don't have much money. So you don't have $100,000 to invest today. You only have $10,000 and you want to invest and let your money grow for 10, 20 years. How long will it take you to be a millionaire? You'll be surprised. It's not going to take that long, by the way. Again, I really have to say this a lot of times because I want to make sure that YouTube does not deem this as misleading. This is just a projection. There's no guarantee that you're going to get this amount of money. All these numbers I'm showing you here, guys, are just based off of round hill historical distributions that they have been paying and also based on the share price that WPAY is at the moment. So if you invested $10,000 as of today, then end of next year, your portfolio will be 31,000. So this is just after 2 years because you invested that $10,000, you will be getting about $7,000 in distributions. And if you add that distribution, you reinvest every week, you're going to compound. End of second year, your portfolio is at 31,759. End of fifth year, your portfolio is at 179,000. You keep buying more shares and you keep reinvesting your distribution. Year 7, your portfolio is at 567. Guess what? Invest one more year, then your portfolio will turn into $1 million portfolio. And this is from investing only $10,000 within 8 years. But this is only true if the share price stay the same at 54.10, the price you're buying today, and an average distribution will remain at 82 cents per share per week. If there's any reduction in dividends or distributions or share price, of course, that will change everything. And there's no guarantee that if you invest in this ETF today, you're going to turn your portfolio from $10,000 to a $1 million portfolio within just 8 years. Again, if you don't want to miss any of these type of updates and income guidance, please consider subscribing to this channel. And don't forget to smash the like button and share with someone you think this video may help. Thank you very much for watching. I'll catch you next video. Bye-bye.